If you've been a fan of the Big Bang Theory and Penny more specifically, you probably heard about the Cheesecake Factory before, right? Well, if you knew, maybe you didn't know, probably you knew because you watch the other financial education channel, you know that it's a publicly traded company. Ticker symbol CAKE. One hell of a ticker. I'll be honest, just because of that, I think it's worth investing. But for real, it's a $2.4 billion company. Year to date, it's up 22.77%. Over the last 3 years, the stock is up 7.37%. And over the last 5 years, the stock is up 15.81%. As you can see, there was a big crash here because of the pandemic. And then back in 2021, when, well, everything you touched turned to gold, the stock went up quite higher, 56% actually, well, since the end of 2019. Currently, it has a forward PE of 12.4 times and actually pays a nice little dividend, 2.57% dividend yield. If we look at what the analysts are expecting for the coming fiscal years, including fiscal 2024, sales growth of 4.1%, while EPS growing 19.5% in fiscal 2025. Moving to fiscal year 25 and 2026, sales growth of around 5.7 to 6.1%, and EPS growing close to 11 and 7.5% in fiscal year 25 and then fiscal 2026. So, okay, top line growth not that fast, but bottom line is expected to grow a little bit faster, plus it's paying a dividend. If we look at the current average analyst price target, that sits 1.39% higher than the price we're at today. Overall, if you look at some pricing metrics, for PE we've seen 12.4 times, which is much lower than its 5-year mean. EV to EBITDA 13.6 times, also lower than the 5-year mean, which sits at 19 times. Price to sales 0.6, which is about the same as the 5-year mean. Price to free cash flow 38.1 times, and that's in the last 12 months. And then price earnings to growth 1.15, so definitely not the expensive stock. Now, before diving a little bit deeper, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Alright, so if we look at revenue growth and free cash flow growth, the past all the way through fiscal 2026, of course, like I said, we've seen here huge growth after the pandemic crash, so 47.6% revenue growth year over year. And then free cash flow peaked then as well back in 2021, and it's been flat-ish, right? It's been flat-ish for the last 2 years or so at around $55 million or so on average. In the last 12 months, it sits at 56.1 million. And for the fiscal 2024, it's expected to be 138.4 million and revenue growing 4.1% and then accelerating a little bit in the next coming years. Free cash flow is expected to grow as well a little bit in the next 2 years. Zooming out a little bit, we can see that revenue has grown quite a lot since 2014. So revenue is actually up close to 80% since then. But free cash flow is actually down 36.4%. As you can see, free cash flow has been higher prior to the pandemic. Yes, it has recovered a little bit back in 2021, 2022, but since then it has come down. Then looking at gross profit, net income, operating margin, and gross profit margin, we have seen a small recovery, right? Gross profit margin and operating margin, the bottom was basically here, Q4 2022. Gross profit margin 38.8% and operating margin 2.5%. We're now at 4.8% and gross profit margin of 41.5%. Gross profit has recovered nicely and net income as well. Now, more recently, there has been an activist investor that, well, took a roughly 2% stake in the Cheesecake Factory, and they are called GCP Investment Management. By the way, for those that don't know, the Cheesecake Factory owns and operates more than 300 locations across the US and Canada, including its namesake restaurants and others such as North Italia, according to its website. To many of its customers, Cheesecake Factory is known for its extensive menu with options ranging from Tex-Mex egg rolls to fettuccine alfredo and more than a dozen flavors of cheesecake. To be honest, I've heard many people say, and I was there myself, I think the menu is just way too big, right? Maybe focus on narrowing it down a little bit, but maybe that's what makes it special. I don't know. Anyways, GCP has privately argued to Cheesecake Factory executives that 3 of its restaurant brands, in particular, would be better off as a separate company focused on faster growth. North Italia, an Italian casual dining concept, Flower Child, a health-focused fast casual chain, and Culinary Dropout, a gastropub known for its pretzel bites and fried chicken. Now, for those that don't know, sometimes when you spin off those companies into, well, separate ones, but you still have a stake in those companies, the focus can be much better. And so these specific companies, not under Cheesecake Factory, could operate better, more profitable as well, and so perform better from a return on investment perspective as independent companies. This is basically the case that they're making here. Now, last quarter, comparable restaurant sales rose 1.4% year over year. The CEO said the following: building on our first quarter momentum, we delivered solid top and bottom line results in the second quarter, contributing to a strong performance in the first half of the year. Our second quarter revenue finished towards the higher end of our expectations, and we generated robust earnings growth with profit margins exceeding the high end of our expectations. Our second quarter results were led by the strength of the Cheesecake Factory restaurants, the resilient consumer demand for the distinct high-quality dining experiences we provide our guests, and brand affinity for our namesake concept has been pivotal in supporting our continued outperformance of the broader casual dining industry. Our operators drove solid operational execution within our restaurants to deliver year-over-year improvements in labor productivity and hourly staff and manager retention. We opened 5 new restaurants across various concepts and markets during the quarter. The strong demand and sales performance at our new restaurants openings underscores the broad appeal of our experiential concepts. With 11 restaurants opened as of today, we are well positioned to meet our development objective to open as many as 11 new restaurants in 2024. Most importantly, following 3 consecutive quarters of stable top-line revenue, strong operational execution, and significant profitability growth, we generated the consistent results that the Cheesecake Factory has long been known for. And that's basically what you're getting with restaurant chains as investments, right? You want revenue to grow steadily, and you want the profitability profile of the overall company as they grow, as they open up more and more restaurants, to stay stable while also improving over time, so the cash flows continue to be stable but also grow throughout the years. Now, in this case, they're also paying a dividend, so you're making money on that front as well if the stock doesn't move much. It's a very, very interesting company, to be honest, because usually, well, we look at tech companies on this channel, we look at McDonald's, Chipotle, stuff like that, but I never thought of the Cheesecake Factory as a interesting investment. Now, I admit the reason why I'm making this video is because, one, many of you have requested it, probably because Jeremy from Financial Education is talking about this company more and more. But yeah, it's interesting because you're getting a nice yield, plus this is a company where you could find some growth and some value. Now, yes, it has gone up already this year, but let's actually do the reverse DCF part. So right now, as we've seen, free cash flow trailing 12 months, $56 million, but we know that it's expected to be more than double that for the year, right? But let's stay with this number right now. Terminal growth rate 4.24%, discount rate 8.2%. How you get that number? You basically take the terminal growth rate plus the implied equity risk premium, and you get this number. So to justify today's price, it has to grow. The implied growth rate is basically 8.8%, which is, of course, higher than what we've seen, right? So you might say, oh, maybe it's overvalued right now. Yeah, maybe you might make that case. Plus, you might want to increase the discount rate as well, right? Maybe put an execution risk on top of it. Okay, could very well be. But remember, free cash flow right now, $56 million, because it is trailing 12 months. It's expected to be more than that for 2024. I think it was around $130 million or so. $138 million to be more specific. Now, okay, if we do that, then maybe we might want to increase the discount rate. Let's put here 10% or so. So if it's 10%, then of course the implied growth rate can be and will be lower. in this case 2.2%. And so now you can start to say, okay, we've seen that revenue and especially EPS is expected to grow faster than that, especially in the next 2 fiscal years. So maybe right now making the assumption that they will be generating $138 million in free cash flow for the year. And so because of that assumption, I've also increased the discount rate. Then 2.2%, justify today's price, makes sense. I'll also take that dividend. Thank you very much. Now looking at this stock right now, it's actually been on a roll since October 2023, right? It's actually been making higher lows for quite a while. Yes, sometimes it did break under the 200-day moving average, but as you can see, it did not stay under it for a long period of time. This was the August 5th crash, so every other stock had a very, very bad day and basically went under the 200-day moving average if they were close to that. But you can see a solid and fast recovery here. Plus RSI is nowhere near being overbought. We've also gone above that previous resistance, which was $40. We're now nearing the next point, which is around $44 or so, as you can see right here. So yeah, right now it definitely has momentum. It's performing quite well as a company, surprisingly enough, because to be honest, I never thought I would be talking about the Cheesecake Factory, but okay, I mean, you live and you learn and you educate yourself along the way. It's basically why I'm making this video as well. So yeah, overall, that's about it. If you want to get exposure in these types of industries, specifically this company, okay, go ahead, get yourself a little piece of pie as well, because why not? But yeah, my personal opinion, I think there are much better options, especially in the restaurant industry. But that's just me. Of course, do share your thoughts down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.